Hello and welcome, everybody. This is Chart Request Live. Today is Tuesday. We do this show twice a week right here on Stock Market TV, 1 o'clock Eastern Time every Tuesday and Thursday. I am joined by my esteemed co-host and friend, Patrick Dunawilla of the Chart Report. What's up, Pat?
Steve, how you doing?
What do you think? 2 days of selling?
2 days
Is it
of
over?
sun, and if we close here, it still wouldn't be a 2% pullback. How incredible is that? I mean, we've had what, 20 over, we've gained over 25% without a 2% pullback. I mean, wow. If
Uh,
we closed here, it would be down 1.25% on a closing basis.
and we've seen these like super low volatility bull markets just in recent history. I think 2021 was like that, 2017
2017, yeah.
like that, right? Just super low volatility. It's not a bad thing at all. So what do I do when you get to a point, I don't know, the past 2 weeks now, getting stopped out of trades a little bit more than usual, um, not finding as many new bullish chart setups as usual, feeling like we're due for a corrective wave, right? Or some sort of corrective period. I'm talking about broader market risk assets in general. What do I do? I ask myself, what are the most bearish things I can find on a technical basis? This is one of them. Um, and I don't know. I just want to throw it to you before I say anything else. How bearish? What do you think? So I'm showing a momentum divergence where this is the daily RSI 14 indicator in the lower pane. We've been making lower highs all year. This has been going on for 3 months now. As the
Yeah.
index steadily grinds higher, but is clearly losing momentum.
Yeah, and I really don't like that that momentum's not getting overbought anymore. You can have the divergence and it can persist for a while, but then when momentum starts not getting overbought, that's kind of a problem. That's a sign that, we're losing steam.
From a broader bull cycle perspective, though, this is like whatever, right?
Yeah.
Because I think it's becoming more and more of a stock picker's market. So, okay, say this bearish momentum divergence comes to fruition. So you get some sort of pullback here within the context of a broader primary uptrend, right? We had a nasty pullback July to October of last year. So
Right.
maybe we see something similar at the index level.
Right. And now would be the time, if you're a fan of seasonality or the presidential cycle, now would be the time where that would happen. So it would make a lot of sense, right?
Yeah. Stock pickers market. All bull cycles or sustained bull markets are characterized by sector rotation. Go buy ones that don't look this way. So here is the large cap energy sector spider, XLE, printing one of its highest momentum readings of all time as it breaks out of a multi-year range. So I guess what I'm saying is if it's not mega cap growth and tech and the NASDAQ 100, there are other groups that we could lean on, right? And rotate
Yeah.
into. I think energy is one of them. And there's a lot of energy requests in the chat. At least I see the first one. So let's hit
Yeah,
it.
we got to hit the mailbag as always first. So let's knock those out first. Let's start with Wavies, CENX.
It's not MicroStrategy.
It's not MicroStrategy.
Yeah.
And he says long for the rest of the year.
This is great. Century Aluminum. So this is the kind of industry group that we want to be looking at. What have we been talking about on here? Talk about a record momentum reading. But also it's a commodity stock, so apparently an RSI 14 reading in the upper 80s is not uncommon for this one. No, we were talking this morning on the morning show, Patrick,
Yeah.
about the high beta nature of commodity stocks because a lot of people don't think of them that way, right? They're
Yeah.
boring stocks. Don't be confused. These are not utilities. These are
Well,
not.
because they are boring most of the time, but then all of a sudden when the underlying starts moving, you can get some pretty spectacular moves.
which is the definition of cyclical, right? We have
Right.
these secular stocks like tech, healthcare, communications. A lot of them fall into that theme where they're just slow growers over time and recessions don't hit them as hard. And that's great. These cyclical names, commodity stocks, we go through these boom bust cycles, right? Talking about the hard economy, the real economy, where commodity prices fluctuate in a very volatile way. These guys' earnings go from negative, right? They go from unprofitable a couple years to making a ton of money. And then the market has to reprice that. So you can see these monster moves. Century Aluminum, this is one of the more speculative areas of the industrial metals complex. The reversal's in, right? This is the pattern that we've been buying. We want to continue to buy. I think the trade here is simple. Where we are now, maybe not the most actionable, but if you're playing it back to the highs of the prior cycle, you're looking at just north of 30. I like this more on weakness to 13. But if we start to coil here and digest gains, like we're up 5% today, I don't think it's something you want to jump into right now. The way you enter something like this, where the base is already complete, is you wait a couple days or a couple weeks even for something high and tight, some sort of short-term continuation pattern, and then you buy that resolution.
I like that. But let's stay with the oil and gas theme and go to KMI, Kinder Morgan. Sounds like the person who requested it is already long and they're wondering what to do with the position. So maybe give targets and risk levels.
I mean, it's actually an industry leader or one of the larger nat gas names, but it's also so this is KMI on an absolute basis, shown here, trying to work on a base, although maybe not the best looking base. Now let's look at it on relative terms. This is KMI relative to its peer group, large cap sector spider XLE. The stock's just been a dog forever, right? We could zoom out with all the data that we have, and it's making new lows more or less right now. So is it a name that you want to go to as a preferred vehicle in a bull market for commodities or energy? No, not at all. It's the opposite. However, if you're already in it, okay, you're trying to figure out what to do. You have a shelf here. Let's drill it. Let's zoom in here. So multi-year base, big base that has not completed. Just took out some pivot highs. So 18 is a big level. We're above it. That's good. But there's just so much price memory, right? The more I zoom out, the more price memory I see. From just pre-pandemic, before the COVID sell-off, to just the highs from last year, there's just a monster range here. Also, it's very low beta, low volatility, midstreamish, right? It's not the juice.
Yeah.
It's not the alpha that you're looking for in a bull market for energy. I think you want to lean on the explorers and producers, less on stuff like KMI. But for now, if you're above 18, I think it's okay. But there's just so much overhead supply here.
So I can't find any more requests, at least in the mailbag for energy. But let's move on to BHC. It says it's an icon play, looking like it's breaking out of a 2-year range, huge volume pocket.
Pat, you're younger than me. I know. But do you remember Valiant Pharmaceuticals?
Oh yeah, I remember Valiant.
So
That
this is
was Bill Ackman.
it was
And was Icon short that one? I can't remember.
it was one of the larger healthcare companies at one point.
Yeah, and it just, man, that thing,
No good.
quite the fall from grace.
No good. So don't cook the books. That's important. Anyway, what was salvaged of that whole situation is a company called Bausch and Lomb. If you're seeing eyeglasses person and maybe have contacts, you're probably familiar with this brand. So this is an eye care company at this point. But regardless, we talk about this base in biotechs that just could never complete. The ones that are completing bases in healthcare I think are very viable. And BHC is just about that. I think you want to keep it tight here because you don't want to be involved if we're back in this box, right? But if this pattern resolves and we go higher from here all day, I think you can own this for multiple price targets. But if we fall back down into this range, it's messy. Look at the sideways 200. It might need more time. 10, I think 10 is that level. You could even bring that down a little bit. 990? I don't know.
Yeah, I mean that $10 is an important psychological level to clear too. Wait, are you saying this is the old VRX?
Yeah,
Really?
yeah, this is Valiant.
But I mean, you mentioned the eyeglass thing, so it's the same company, right?
This is Bosch and Long.
But Valiant wasn't doing eyeglass stuff before, was it?
Yeah, this is one of their brands. Dude, Valiant was huge. That's my point. That's why
Wow.
it was such a big deal. Valiant was one of the largest companies in the healthcare sector.
Yeah, I mean, what a
So,
disaster.
so what they did was they reorganized with their most popular, right, consumer-friendly brand.
Ah, okay. Makes sense.
Doesn't matter who they are, who they used to be, whatever. Healthcare is a group that's very mixed from a leadership laggard perspective. But if you have a pattern like this completing, right, a valid bearish to bullish reversal pattern, I think you got to buy these all day because they've been very good to us. 9 3/4, $10. I think the reversal is in, and this one's quite actionable right here.
All right. Let's move on to IoT. Sorry if I'm rushing through this. I just want to get
No,
through the mailbag so we can get to some of the requests in the chat.
I'm done. Uh, Trendy,
Trendy.
good chart.
We've looked at this one a few times.
Yeah. So where's your stop? I think is more the question on this one, right? It's
Yeah.
an obvious bullish chart pattern here. Gotta throw a target out. I think 45 works. I think if you want to hold it longer term, you can measure the base, right? Extend that like $22. You get to like about 52. But where would I want my stop? If you entered it over the past few weeks, you're entering above 36 to get stopped out all the way back at 31 might not be so good. So if you're looking for an earlier exit, I think the VWAP from the year-to-date lows, you're breaking it now. If we close below 35 today, this one's probably very likely retesting 31. And if it breaks 31, you want no part of this, right? So I would keep this pretty tight here. 35.
All right. Let's move on to a materials name. I know you've been watching the materials sector and what's going on there. CE.
So just to set the stage first, this is a weekly chart of large cap materials. So
Might
good,
finally break it.
right? So 10 straight up weeks, breaking out of this multi-year range, giving some back here this week. That's fine. That's great, right? Where did we come from? Where have we been? If you sell off for 2 3 weeks, digest these gains, and then resolve back above this 90-ish, low 90s, maybe 92 level. Materials all day. This is probably one of the better places to be into the last 3/4 of the year. So then chemicals, the largest subgroup in materials, naturally should be a good place to hang out. This one I like a lot more probably next month, right? So zoom out to a weekly. And again, we just talked about 10 straight up months. This one's been up just about every week this year. So just a relentless uptrend. But for now, what a logical level for it to digest some of those gains, right? So 170. I think you put this one on a watch list. You think about it, you watch it for a couple days, probably a couple weeks, and then you buy on strength through 170.
You know, what's really interesting is Kevin, who requested this, said March through April seasonality is really good. So apparently over the last 20 years, it's done 12% on average. Wow. Uh, who knows? Maybe that's just one big outlier month. But anyway, you ready to move on?
Yeah.
All right, let's go to let's move to some tech. Let's do snow.
No, you can't buy it. So I think it was the CEO came out, bought a ton of stock last week, but this one had earnings recently. It was starting to look more and more like one of those chart patterns that we just got to be buying, right? Just classic reversal. And then it failed miserably. So let's just mark it up quickly so you guys could visualize what I'm describing. But until we're back above, I think just call it 200. So we're back above 200. No way. So this is the failure. Back in the box. You can't own this here. You can only own this on strength back above 200.
Yeah, that's ugly. I got another one. Kind of looks similar. GTLB, GitLab.
I own a little bit. So Google loves it. I love Google. I'm
Speaking of, nice little
involved.
breakout yesterday in Google.
Uh, own a little bit of that too. Love Google. I think tech, you want to continue to look for bullish opportunities in tech while you rotate into other areas or at least add exposure to other areas and other sectors. I think you want to keep looking at tech because it's just rotation within the sector, not rotation out of the sector. So GTLB started to go 70 is really that level. You really wanted above 70. I think you could trade it down here on a little scoop and score, but it's not happening, at least not yet. So back against that 200-day moving average, you got a really clean level right here. So if you're looking for a trade, 54, but then more overhead supply up around 70. And for something longer term, above 70 all day, target back at 134.
I like it. I like it. Let's move on to LSPD, light speed.
So this is, yeah, something for everybody here. Wow.
Something for everyone.
So speaking of ranges, that's really it. Did they say what their bias is? Are they looking to get long or short?
Let's see.
Because short all
Yeah,
day.
was thinking about buying the low end of the range. Yeah, so they're seeing that too,
Yeah.
with a stop just below the 1270 area. What do you think? Low bullish divergence.
Again, it's not my favorite unless there's some sort of like broader intermarket or sector industry theme here. I don't know what kind of stock this is. Light speed commerce. Um, I don't want to be shorting things in general in this environment, right? Shorts are just lower probability trades. The worst stocks are not breaking down. They tend to be digging in and rebounding off of support levels. So that's fine for a trade, but from a primary trend perspective, this one's not in the clear until about 20. So a lot of work to do. I think you want to really zoom in and say, okay, I'm buying the lower bounds of this range, which we've already outlined here in the lower rectangle. So that's called 13. Then, okay, I'm looking for confirmation for this short-term pattern. I think you get it on this little very short-term base, right? So 1450 for confirmation. And then you could trade it back to the upper bounds. And it's not a terrible trade at all. It's almost 50%. But it might be a tough one or a messy one because the primary trend here is trendless, and there are things that are reversing trend right now into fresh uptrends that give you a much higher win probability.
Yeah, that's a great point. The person asking it even acknowledged that it was a laggard within software. So probably not the best name out there, but let's move
But
on. We
that
got one more from the chat, and
but
then
that context, hold on, Pat, that context is important, right? It's a software stock. So, okay, why wouldn't this one look like the rest of its group, right? All of its peers are completing reversal patterns. Why not buy the lower bounds of this one? If you came and told me this is a solar energy stock, I'd say, they're all breaking down, right? A little bit different. So, yeah, you could take a shot.
we got one
Okay.
more from the mailbag. Then we move to the chat. So MDB. I feel like we look at this one every week.
MV what?
MDB, MongoDB.
Yeah. Speaking of software, right? Just speaking of messes, really. Look, I hate this momentum. So, Pat, we talk all the time. You know how I feel. It's more about the regime than the divergence when it comes to the RSI 14. So, what is the regime here for MongoDB? Is it hard to tell? That's because there is not one. It's
Right.
overbought, it's oversold, it's overbought, it's nearly oversold, it's overbought, just about oversold again. That's a messy trend, right?
Yeah.
I can look at momentum sometimes and then say to myself, I'll bet the 200-day moving average is sideways. This is the kind of momentum that lends itself to a sideways or trendless long-term moving average. Then you look at the chart and it's like, yeah, we're trying to climb up the right-hand side of this big base. But boy, has it been hard. There are other stocks that have reversed trend and gone on to achieve their prior cycle highs and then some. This one kind of still just stuck hanging out here. I don't like the way I have these drawn. I do like this VWAP here, but the range is really like this. And that's a big range, more than $100 range here. I think you only want to own MongoDB on strength back above the pivot highs from February. That's around 500. And then even then some, 570 and change, 580. The highs from late 2021. You want to see this whole pattern complete. So this one's really messy. And in tech right now, where I guess participation is thinning out more and more. So there are less and less stocks trending higher, making new highs, breaking out. You really want to lean on the leaders, and this is not one.
Yeah. Good advice. Let's move on to one that a lot of people are probably watching, Tesla.
No. So what I just said about tech stock and leaning on the leaders and staying away from the really messy ones, again, since last year, overbought, oversold, overbought, oversold, right? Oversold, oversold, oversold. I would argue this is now bearish momentum regime, right, Pat? This is bearish momentum.
Yeah. And you know, with
So,
this one, I'll just remind you of something you said this morning in relation to Tesla that made a lot of sense to me. This stock tends to make really big moves
yep.
in a short period of time, and then for the rest of the time just sits around chopping people up.
This is what Tesla does. It's a monthly chart of Tesla. So it tends to go up a lot and then go sideways a lot and then go up a lot again. So I think this is just one of these really long-term digestive periods for Tesla. That's a big arrow, huh?
Yeah.
And that's just what it is. We talk about Tesla. So I'm zooming out, I don't know, 12, 13 years here. Stock IPO'd in middle 2010. It ramps higher and we all go crazy about it for a year or two. And then it goes straight sideways and shorts go crazy and Jim Chanos gets excited and I don't know what is those guys' name? The short sellers? Citron Research
Oh
writes a
yeah, yeah.
report. Citron and
There's a
Hindenburg
few of them.
write reports, right? Oh, what a great short it is. And then it breaks out again and it goes like 100x. Everybody goes crazy and then it's stuck sideways. It's like, okay, Tesla's not taking over the world again. The
You know,
valuation.
I'm not a huge Elliott Wave fan, but what you're describing is kind of the basis of Elliott Wave, where that first impulse is the, early adopters and the insiders, and then you have the correction. The second wave is the institutions, then you get the correction. Then the third wave is the public, and then trend is over.
Yeah, and if you catch one of these waves, like I'm not kidding. So from the 2012 lows to the, I don't know, 2014 highs, 1,000%. From the 2019 lows to the 2021 highs, 3,000%. Like when it goes, it goes. You want to be involved. But I think this is just one of these ranges where you wait, you be patient, and If you
Wait for
own
the
it
breakout,
long
right?
term, the structural trend is higher, right? If we were to zoom out on a relative chart too, would look just as good. So if you're a long-term buy and hold person, and this is in, some sort of retirement account, yeah, you're fine. If you're trying to trade it, this is an awful mess. You want no part of it.
Let's move on to something that looks decent here.
Yeah,
Let's do Levi. So this one reports earnings. For whatever reason, denim stocks have been ridiculously strong. So
yeah.
yeah, earnings tomorrow.
It's funny. It's like, oh, can we just look at one that's in an uptrend? Pull up the denim charts. I guess not
Or
your everyday leaders. When you think of the strongest stocks in the U.S. equity market, Levi Strauss might not come to mind. And retail in general, apparel more specifically, really mixed right now. This morning I was reading about how I think it's Philip Van Heusen, PVH. So that's like Tommy Hilfiger, Polo, Ralph Lauren, Calvin Klein. Awful, awful earnings report, bad guidance. Stock was down like 20% this morning.
oof.
And then we talk about Abercrombie and Fitch and American Eagle and some of these denim companies who have just been in like crazy uptrends, not just recently, but for over a year, going on multiple years now. So
Yeah.
apparel, you got
I
to.
don't mean to interrupt, but let me just give you some more context. He says he's long with a stop loss at 18. It looks like it was rejected at 20. And he's wondering if he should hold through earnings tomorrow. What do you think?
I think you're fine to hold through earnings just because the space, all the other jeans manufacturers are beating and look great. I hate to see this down 7%
So
ahead of earnings.
yeah, I'm seeing
Let me,
insider selling
whoops,
only $500,000 worth. That shouldn't be material.
let me see. Yeah, all right, maybe don't overthink it, but the earnings reactions tend to occur in the direction of the underlying trend, and it tends to be the short-term trend. I'm going to flip my moving average to a 20-day, right? So the short-term trend undeniably higher despite this one day of selling, which I don't love, right? I'd rather see some sort of healthy bid into the report, not 7% down, but the short-term trend is higher. So I think there's a lot to feel bullish about heading into the report. And then more importantly, what the peers have done, right? We made a All-Star Charts custom denim index. That's how good these stocks have been. So I think if you need levels, you got pivot highs from last year. Last February, 19. The 38% retracement comes in around 1960. First stop, 24. And then it's the prior cycle highs, just north of 30. But
Yeah,
nice base, very nice base.
we'll see what earnings tomorrow bring. Let's move on to ARM.
We're just talking about this one.
That's right.
I just marked this up this way when we were on Spaces.
Already have it drawn.
All right, well, I just did it. So because I do redraw for this show, I think that's important,
Oh
right?
yeah.
I try to clear everything unless I just recently did it. And I think for any chartist, that's important, right? Because you mark something up, the way the market's going to react isn't the way that you want to draw something on a Tuesday night, right? So you want to draw your charts, draw your levels, their expected levels of support or resistance, and then you want to totally clear them and then redraw them because where you draw things should totally, correlate to how the market reacts to things, right? So if the
Yeah.
market starts to say, no, this 50 level that you're drawing support and resistance at isn't that important, we're just going to blow right through it, then maybe you don't draw your line there next time. Anyway, you got pivot lows here from just last month, right around like 121.50. We tested them and kicked off them here today. You can also draw this little coil that began in February, like with these green diagonal lines that I've drawn, right? So both are kind of breaking. Below 120, I think there's risk that you head all the way down here and potentially fill this gap. How
Oof,
about
that
like
would be ugly.
30% downside? You don't want to be involved, particularly with the way that technology and semiconductors are acting more broadly and on relative terms, right?
Yeah,
So 120, I'd be done.
but it looks like it's getting a little bit of a bounce today, right?
Let's do one more.
Okay, one more. Let's do NU.
New bank. Everybody loves this one. The fundamental guys are even getting involved. There's a really nice growth story here. Uh, some of our smart friends love talking about it. $12. I think you really want the breakout above, the highs that happened. I don't know, the day of the IPO or the day after the IPO back in December 2021. So just huge level here. 11 and then some. And if you measure it out, you get to about 17. That's big upside, Pat. We're talking about what, 60%?
Wow.
And
You
you
know,
won't,
it's amazing how those levels from an IPO always come into play, or not always, but a lot of the times come into play later on, even years or decades later. An IPO low or an IPO high, or just the IPO price.
and you won't find many financials that look this good, right? It's technically a bank, even though
I mean, you're seeing more and more financials. You know, financials have been the strongest sector since the October low.
yeah, that makes sense because they had a much better Q4 than energy and materials.
Okay. In terms
So
of performance, right? You're not talking
yeah,
earnings.
yeah, but it's we talk about materials and energy, and we've been talking about industrials, really the entire bull market. It's a value cyclical theme, right?
Yeah.
It's all four of those groups, and they should work together. And throughout history, we see those four groups work together over and over and over again to the point where if financials are great in Q4, then you want to look to materials and industrials and energy in Q1 and say, well, are these guys going to start participating as well? And now we're seeing all of them, right? So this theme, it's really a factor. This is the value factor, more or less, is working so well right now. I think just again, as people have written it off one more time.
Yeah.
Value has not worked as a factor for over a decade, more or less my whole career. And
Right.
when I was in college, it was all about value investing, fundamental statement or financial statement analysis, right? The fundamentalists were absolutely killing it. And then we went through this just growth stock boom for the last 15 years. And now we're going through this whole AI revolution. Everybody just wants to talk about artificial intelligence and mega cap tech and mega cap growth. But then you look beneath the surface, and there's this big relative trend reversal brewing in all of the value groups.
Yeah, I
That's
mean, you look at
us.
a stock like GE or some of these, dinosaur companies,
Yeah,
pretty big moves.
it's absolutely. That's a great example. GE down 20% today, Pat.
Well, so that's they had a spin-off.
Oh, that's what it is.
Yeah,
Got
so it's not
that
really.
data. That data. Anyway, New Bank looks great. I think long all day above those old highs from 2021, 2022, 11, $12. And what I was just trying to show was the relative trend between New and KVE. This is the Spider Bank Index, right? So as good as it really gets in the world of financials. That's it. You got anything else?
Um, I know you want to take a look at Litecoin real quick. Why don't we take a look?
Litecoin?
Yeah. I mean, we got a ton that we didn't get to today.
That's okay.
Here, I'll just read some to you. Devon Energy, Nike,
I'm long
uh,
Devin.
CloudNet or Net, Cloudflare, the
I'm sorry.
Coupang,
All right. All
CLSK.
right. All right. Okay. We'll do a couple of those. Uh, Litecoin, yes, above 110. And if you're feeling jumpy, which you can because it's a bull market, the $100 roll is good. It was always 100 in this one. We've been talking about it like it's 100. You got these overshoots here from July of last year, and now again, just right now. So this 100 to 110 area is that level for the trend reversal. But if you're scaling in, you could start here, I think. And then we'll do a couple of these. Coupon, it needs time. This is one of those that I've kind of been jumping, scaling into. I want to get more and more involved, but I'm not making money on it yet.
Man, have you noticed a theme here? Software, a lot of these software stocks, not easy.
Uh, it's not just software, right, Pat? It's technology. The market internals for technology have been nothing like industrials, right?
Do you think that kind of goes along with what you were saying about the whole value thing?
I think it's more interest rates than anything, right? It's the guys who have money and don't need money and are never going to raise again, right? Apple has what, 200, 300 billion dollars in cash these days. So when interest rates rise, what people don't understand is that they're they're not a borrower, right? They're a net lender. They'll make money off of 5% interest rates. While somebody like, I don't know, Coupang or a unprofitable tech company who needs to continue to raise capital through debt or equity offerings is going to really get hurt by a rising interest rate environment. There's just a very big difference, right, between the large and the small in a group like technology. So I think it's mostly interest rates that explains that bifurcation. But the bigger point is that technology, it's the large caps, it's the mega caps, it's Nvidia, it's Google, it's Microsoft, it's the ones that we come on here and talk about every day. It's not these archy, much more speculative names or your Coupongs of the world. They're still struggling. So we want to see more and more reversals in tech. I think we will, but slow to start here. And like I said, when I say a lot of failed breakouts over the past few weeks for me, it's a lot of names like this, right? Like I thought this one was going. And I was very much getting involved and jumping this and putting on initial exposure against these August highs. Just less than a month ago, early March. And then it failed right away. So kind of back in the box here. So I'm going to be patient. And like I said, was just scaling in. So we'll be buying more in the future, but really only on strength back above 20, 21st. And then you got the highs from, looks like fall of 2022, 21. And then the reversal's in. And you want to be long all day. And I think, it's no telling where we go. Those old all-time highs look pretty good at around 50. There was one more that I liked that I heard. What was it? Yell out those tickers again. Nike, not Nike. Nike, you can't own Nike. All these other footwear companies are doing great. Go buy Crocs or Deckers, anything but Nike right now. And I love Nike. What else? Pat, you're on mute, buddy. Does Patrick know he's on mute? All right. Patrick's just going to continue to talk to himself, and I'm going to take us out. This has been Chart Request Live. Today is Tuesday. We will be back on Thursday. Pat will be on the charts. Maybe he will also figure out Mike by then. That'll be 1 o'clock Eastern time Thursday, right here on Stock Market TV. Until then, join us on the morning show every morning, 8:30 to 10. Hope to see you there. Pat, did you figure this out?
I don't know. Can you hear me?
Yeah, we can hear you.
Oh, you can hear me?
Any closing thoughts?
Not really. It's just minor pullback. I know it probably feels like a lot, but geez, not even down 2%.
Rotation. The rally is broadening. So I think our portfolios and the positions that we're taking on and getting long can broaden also. That's really all it is, right?
Yeah.
Stock pickers market.
All right. Sorry we didn't get to all of them today, but we'll be back Thursday.
All right. Thanks everybody for watching.
Cheers.
let it